All right, ready to dive in. Today we're looking at index funds.
Ooh, index funds.
Specifically, the Vanguard Growth ETF.
Okay.
You know it as VG.
Right.
And we found this really interesting article on the Motley Fool
Oh, yeah.
that calls it, get this, a potential lifetime investment.
Wow.
A lifetime.
So we're going to...
The Holy Grail.
Yeah, is this the Holy Grail? Can you really just set it and forget it?
I love that idea. The Holy Grail of investing is what everybody wants, right?
Yeah.
And this article is really interesting. They say that almost everyone should consider index funds.
Yeah, they kind of jump right into that,
Yeah.
assuming that we all know what they are.
Yeah.
And maybe not all of us do.
Right.
So can we back up for a second, just like investing 101?
Yeah.
What is an index fund?
Totally, yeah. So imagine you're trying to build some amazing Lego thing,
Okay.
but instead of picking out each brick, you get a pre-made set.
Right, like that analogy. Yeah. That's kind of what an index fund is. It's a bunch of stocks all bundled together that try to track a certain market index.
Okay.
Like the S&P 500.
Right.
So you're not out there trying to pick the winners and losers.
Yeah, so you're not trying to outsmart the market.
Yeah, you're just riding the wave.
You're riding the wave, yeah.
Exactly.
And VC, now this is an ETF, which stands for Exchange Traded Fund.
Mm-hmm.
So what's the difference? Is there a difference between a regular index fund and an ETF?
Good question. ETFs, so like VUG, they're traded on the stock market, just like any other stock,
Okay.
which makes them super easy because you can buy and sell them any time of day.
Okay.
Normal index funds, you got to buy and sell them through a brokerage.
Okay.
There might be more restrictions, fees, that sort of thing.
Got it. So more flexibility with the ETF.
Yep.
Now, this particular ETF, VUG, is tracking the, get this, the CRSP US Large Cap Growth Index.
It's a mouthful.
Okay.
It sounds
Right, so break
complicated.
that down for us.
Yeah, but it's actually not too bad. Large cap, that just means big companies, right?
Okay.
Companies with a big market cap.
Gotcha.
Growth means that they're expected to grow faster than the average market.
Okay.
And CRSP is just the Center for Research and Security Prices. It's the company that puts this index together.
Gotcha. So we're basically talking about an ETF that is betting on the big players who are going to continue to grow.
Exactly. And that focus on growth, that's a big part of why people like VG.
Right. That's where the growth comes from in the Vanguard Growth ETF.
Yeah, but like anything else, it's got some risks too.
Right.
We can talk about that later.
Yeah, we'll definitely get to that. So the Motley Fool gives us 4 reasons why they think VOG is a great long-term investment.
Okay.
And the first one they talk about is low fees.
Yeah.
And they really emphasize this, like how important it is to have low fees.
Yeah.
They say VLG has an expense ratio of just 0.04%.
Wow.
Which
It's
seems tiny, right?
Yeah.
But I got to be honest, expense ratios, I'm always kind of like,
Yeah.
what does that mean? What does that actually mean for my money?
So imagine you're at a really nice restaurant
Okay.
and they add a 0.04% service charge.
Okay.
So if your meal was $100, that's like 4 cents.
Okay.
That's basically you're paying every year for every $1,000 you have in view.
So it's basically a free lunch
Yeah, pretty much.
in the investing world.
Yeah, relatively speaking.
So yeah, no wonder everybody cares about low fees.
Right.
All right, reason number 2, powerful growth.
Okay.
And the article throws out these really impressive numbers about how VIGU has performed in the past.
Yeah, and it's worth pointing out it has consistently done better than the S&P 500 over different periods.
Right.
But got to be careful, right?
Yeah.
Past performance, it's not a guarantee.
It doesn't predict the future.
Yeah, exactly.
Okay, so for the sake of argument, let's entertain those past returns for a second.
Right.
What kind of numbers are we talking about?
So in the last 15 years, VU has averaged returns of about 16.44% per year.
Okay.
The S&P 500, same period, only about 14.33%.
So VIG's been doing better.
Pretty consistently, yeah.
Okay, those are some pretty nice numbers.
Yeah.
And the article even gives us this table showing how our investment could grow over time.
Oh, wow.
I know we can't predict the future,
Right.
but it's kind of fun to play what if, right?
Totally. It's good to think about how compounding can really work for you.
Yeah.
So let's say you invest $12,000 every year in VU.
Okay.
If it just keeps growing at 8% per year,
Okay.
which is lower than its average, by the way,
Right.
after 25 years,
Yeah.
you could have over $947,000.
Almost $1 million.
Yeah, crazy, right?
Yeah. And they're saying if it hits 10%, it could be over 1.2 million.
Exactly.
All right. Starting to see why they're saying this is a lifetime investment.
Powerful stuff, yeah?
Yeah. That's the magic of compounding, right?
Absolutely. Even a little difference in the growth rate over time can mean huge changes.
Yeah.
But got to keep in mind, those are just projections,
Right.
not promises.
Of course. Okay, so reason number 3 is this compelling portfolio.
Right?
And they actually list the top 10 holdings in VGOD.
Okay.
And there are some big names in there.
Like who?
Like, oh, Apple, Microsoft,
Yeah.
Amazon.
It's like the who's who of tech.
Yeah.
It's all the Magnificent Seven. They're all in there.
And all those top 10, they make up 61% of the entire fund.
Wow. So they really drive how Vigo does.
Yeah, for sure.
That's a lot of weight.
It is. It's a lot. Again, I know past performance doesn't predict the future.
Right.
But just seeing those big names in there, it's got to make you feel at least a little bit intrigued.
It does. I mean, we don't know if those companies will keep doing so well,
Right.
but it does give you a sense of where Vigo's going.
Like what their strategy is. Yeah.
Yeah, exactly.
Okay. And then the last reason, number 4, is what they call great growth prospects.
Okay.
And they point out that VGOD is super heavily invested in tech stocks.
Which makes sense, right?
Yeah, with all those companies.
With the top holdings being what they are.
Exactly. At the time that they wrote this article, they said it was long over half of the entire fund
Wow.
was in tech. And they seem pretty bullish on the future of tech.
Interesting.
What do you think? Are you as optimistic about tech?
It's hard not to be, right?
Yeah.
I mean, tech is changing everything all the time,
Yeah.
from software to AI.
Right.
It feels like there's always something new and exciting happening in tech.
Yeah, absolutely.
And it looks like VG's in a good spot to take advantage of all that.
Right. Like they're not just riding the wave, they're at the forefront.
Exactly.
But even with all this talk about all this potential,
Yeah.
we got to talk about the elephant in the room.
Oh, the risks.
The risks. Every investment has risks.
Yeah, no such thing as a free lunch.
Right, exactly. And VG is no different.
Yeah, for sure.
So let's take the rose-colored glasses off
Okay,
and dive into some of those potential downsides
let's do it.
in the next part of our deep dive.
Committee.
Okay, so we've talked about all the good stuff about VG, the low fees, the great performance, the exciting companies they're embedded in,
Right, the potential upside.
the potential upside, but we all know every investment has some risk.
Definitely.
So let's get real
Yeah,
about VG.
let's do it.
What are the downsides? What are the risks? Where are the red flags?
Well, the first thing that kind of jumps out at me is what's called concentration risk.
Concentration risk.
Yeah, and remember how we talked about VG being really heavy on tech stocks?
Mm-hmm.
That's where this risk comes in.
Okay, so for someone who's not familiar with investing lingo,
Yeah.
what does concentration risk actually mean?
Imagine you put all your eggs in one basket, right?
Okay.
And then you drop the bag.
Yeah, not good.
You lose all your eggs. So with VG, the basket is the tech sector.
Okay.
If tech stocks take a hit, for whatever reason, VG could really feel it.
So it's like betting on one horse in a race instead of spreading your bets.
Yeah.
Gotcha. Are there any historical examples of this, like how this has played out?
Oh, yeah, for sure. Think about the dot-com bubble bursting back in the early 2000s.
Oh, yeah.
Everybody was putting money into internet companies.
Right.
It seemed like everyone was getting rich.
Right.
But the bubble burst.
Yeah.
A lot of those companies went belly up.
And people lost a lot of money.
A lot of money, especially those who were all in on tech.
Right.
So it's a good reminder that even sectors that seem invincible
Yeah.
can go down.
Yeah. Okay, so knowing that VAG is so concentrated in tech,
Right.
how worried should we be?
I mean, it's definitely something to think about. This is why diversification is so important.
Okay.
VG can be a great part of a diversified portfolio,
Mm-hmm.
but it shouldn't be your only investment.
Okay.
You want to spread your money around.
Don't put all your eggs in one basket.
Right, even if it's a shiny tech basket.
Even if it's a shiny tech basket like VUGs.
Exactly.
Gotcha. Okay, but even if you do diversify, isn't there always a chance that the entire market could just tank?
Absolutely, that's market risk.
Like what happened during the pandemic?
Exactly, and nobody can avoid that completely.
Clearly.
I mean, think about it.
Yeah.
Economic downturns, global events, who knows, maybe even a natural disaster. All of those things can really shake up the market.
Right.
And even during the pandemic, when the market went down, VU went down too.
Yeah, no one was immune.
Nobody was immune.
Okay, so even with its history of doing well, it's still going to be affected by those bigger forces.
It is. It's part of the market.
Okay, so we talked about concentration risk,
Mm-hmm.
market risk. Are there any other downsides to VU that you think are important?
Well, another thing to consider is that VU is very focused
Okay.
on large cap growth stocks,
Right.
like that's in the name, right? Vanguard Growth ETF.
Yeah.
That focus has its benefits, but it also means it might miss out on some other opportunity.
Okay, like what?
Think about small cap stocks.
Okay.
Those are companies that are, well, smaller
Yeah.
than the ones in VG. Now, they can be riskier,
Mm-hmm.
but they can also have bigger growth potential.
Okay.
Or value stocks,
Yeah.
companies that might be undervalued by the market right now.
Mm-hmm.
VG doesn't really play in those areas.
So it's kind of a trade-off.
It is.
Yeah.
You get the high growth potential,
Right.
but you might miss out on other things.
Okay, gotcha. So it really depends on your goals and how much risk you're willing to take.
Exactly. VG might be perfect for some people, but not for others.
Yeah, so do your research, figure out what works for you.
Absolutely.
It's not about finding the perfect investment.
No.
It's about finding the right investment for you.
Couldn't agree more.
Okay, so we've gone over some of the risks, the concentration risk, market risk, missing out on other opportunities.
Yeah.
Seems like a lot to think about.
It is. It's easy to get overwhelmed by all this stuff.
Hey.
But we shouldn't forget about the good things about VG.
Yeah, true.
Those low fees.
This is low fees, yeah.
They can really make a difference over time.
For sure.
And we can't ignore how well VUG has done in the past.
Right. It's beaten the S&P 500 pretty consistently.
It has.
And those projections for future growth,
Mm-hmm.
while they're not guaranteed,
Right.
they show how powerful compounding can be.
Definitely. And the potential for big returns over the long term.
It's a balancing act.
It is.
Weighing the good against the bad.
Right.
This is why investing is so hard, but also so interesting.
It's like a puzzle, figuring it all out.
Yeah. Okay, so we've covered both sides of VQ now.
Mm-hmm.
But I want to go back to that original claim from the Motley Fool article.
Yeah.
That VQ is a buy and hold forever investment.
Yeah, the set it and forget it kind.
After everything we've talked about,
Mm-hmm.
you think that's realistic? Can you really just buy into VQ and never think about it again?
That's the big question, isn't it?
Yeah.
It sounds great.
Right. Who wouldn't want that?
Exactly.
But it's probably not that simple, right?
It's probably not. There's always more of the story.
Okay, so what's the catch? What could go wrong? What could mess up VUG's long-term success, even with those low fees and its great track record? Lay it on me.
Okay, let's dive into that.
So you're telling me that even with something like VG, we can't just assume it's going to keep going up forever?
Yeah, it'd be nice, wouldn't it?
It would be.
But yeah, VG has done really well because of its focus on growth.
Mm-hmm.
But we can't just assume that growth is going to keep going at the same rate, right?
Right.
I mean, what's popular today might not be popular tomorrow.
Okay, so what could happen? What could change things up in the tech sector that's such a big part of VG, as we talked about?
Think about it this way. Like, a few decades ago, nobody could have predicted how big the internet was going to be.
Right.
It changed everything.
Yeah.
And then you had companies like Amazon and Google, they just blew up, became huge.
Right.
So who knows, right?
Yeah.
There could be some brand new technology.
That we haven't even thought of yet.
Yeah, that we can't even imagine right now.
Yeah. Right.
And it could totally change everything.
Yeah.
And some of those big tech companies, they might get left behind.
Wow, it's hard to wrap your head around that.
It is.
It's a good reminder that we have to stay flexible, you know?
Definitely.
Even with our investments.
Absolutely.
What about all the stuff with governments, wanting to regulate big tech more?
Oh, yeah, that's a big one.
Could that affect V2?
For sure. I mean, there's more and more talk about
Yeah.
how much power these big tech companies have.
Right.
People are worried about antitrust issues, data privacy, all of that.
Yeah.
So if governments start putting in stricter rules
Mm-hmm.
or even breaking up these companies,
Right.
that's going to have a big impact on the whole sector.
VQ could be right in the middle of that.
Exactly. Even though it's an index fund,
Right.
it's still connected to what's happening politically and all the regulations.
Shot connected, yeah.
Yeah. And of course, we got to remember that sometimes crazy stuff just happens to the world.
Oh, yeah, the unpredictable stuff.
Yeah, like economic crashes, wars, pandemics.
Nobody saw a pandemic coming a few years ago.
Right. And look what happened.
Exactly.
Totally messed up the markets.
So basically, you're saying that no investment is truly set it and forget it.
Pretty much. You always have to be paying attention, making adjustments as you go.
It's like a garden, right?
Yeah,
You
exactly.
can't just plant some seeds and walk away.
Right. You got to water them, pull the weeds, make sure they're getting enough sun.
You got to take care of it.
Yeah, your portfolio needs the same kind of attention.
Okay, so even if you choose to invest in VU, you got to stay informed, keep up with what's happening.
Definitely. Check in on your portfolio regularly. Don't be afraid to make changes if you need to.
Right, so maybe instead of buy and hold forever,
Yeah.
it's more like buy and hold, but keep an eye on things.
I love that. Buy and hold, but keep an eye on things.
Yeah.
That's a great way to put it because it's about being committed for the long haul,
Mm-hmm.
but also being smart and knowing that things can change.
Okay, so after all this, after our deep dive into VUG, all its potential and all its risks,
Yeah.
would you personally invest in it?
Honestly, probably, yeah.
Okay,
I mean, the fees are super low.
right.
It's got a great track record.
Mm-hmm.
And I really like that it's focused on those big growth companies.
Right, the potential is definitely there.
But, and this is important, I wouldn't just buy it and forget about it.
Right.
I'd definitely keep checking in on it, staying informed, and making adjustments if I needed to.
That sounds like a smart approach.
Yeah, got to be smart about it.
Informed, engaged, and ready to adapt. I think that's a great takeaway for everyone listening.
Totally agree. Do your research, understand what you're getting into, and don't be afraid to ask questions.
Right. Investing can feel intimidating,
It can.
but it can also be really rewarding.
It is. You can learn so much, and hopefully make some money along the way.
Well said. We've covered a lot today from what index funds are all about
Yeah, it's been a journey.
to all the ins and outs of VUG, the good and the bad.
Right, all the angles.
Hopefully, everyone listening now has a lot to think about when it comes to their own investments.
Absolutely. And remember, there's no one right way to invest.
Right.
What matters is finding what works best for you, your goals, your risk tolerance.
Couldn't agree more. So keep learning, keep exploring, and keep a close eye on your investments. Thanks for joining us on this deep dive.